My name is Soumya Sarkar और आप देख रहे हैं Wealth Redefine blog. In the last blog, we predicted that the market will remain the range bound, and it actually remained in the range bound thing. Which is the most worrying signal at this point of time is US inflation, which has come at around 9.1%, 41 years highest inflation rate in US. If you look at all the major economies in the world except China and to some extent Japan, all other major economies has a higher inflation level. So that means we can see some monetary tightening in those countries. Surprisingly, UK also having approximately 9% of inflation. So that means all over the globe you can see the free money which has been flown since 2018 and massively flown in 2020 after this COVID thing has now getting back into the system. What I'm saying is that it is going out of the system, not into the economy, but going back to the Reserve Bank or Federal Reserve's cash. So it means that the bond yields is going to go up slightly, and the market will definitely have an impact on it. Impact may be restricted in terms of 10% or 12% correction. Indian market has already seen that kind of correction. So major correction may not be there, but we are not ruling out it. Because when you are taking out money from the market, obviously the new investors are not there who can put that kind of money. We have seen in Indian market, FIIs were the continuously selling, They are selling like anything since October 2021. The data is quite surprising that even 10 years, whatever they put it, almost they sold everything in the last 1 year. So that kind of data. But Indian investors have become very resilient on this part. They are continuously putting the money. DIIs are buying almost every day, and they are holding the market at this level, at 16,000 level, which we are right now witnessing. We may see that domestic investors will continue to do well because they are mostly doing it through SIP way. If you look at my older videos and everything, I always said that SIPs are the best way to wealth creation because in SIPs you don't have to time the market. So the more fall happens in the market, it is better for SIP because you are buying more units. So once the NAV goes up, the accumulation unit will give you a better profitability. So these are the things which are there in right now into the market. Another major thing which people misunderstood in my last video, that India has a major repayment in next 9 months. So will it impact like Sri Lanka or Pakistan the way they are facing the issues? No, India is not that kind of country. India is a much more better position. We are thinking about the growth. We are not thinking about collapsing the economy. So we do not see that kind of a red signal anywhere in the economy. Definitely the India's forex reserve has come down significantly, but it is not in a worrying sign. It is not a situation like 91 or 1990s kind of a thing, or not even in 2006, 2008 kind of video. Our foreign reserve is much more stable, good, and RBI has done an exceptionally well job by managing it well. So what kind of market you can expect from here? I must say that 2022, which I told in my almost all earlier videos that would be a difficult year. It may spill into 2023, at least at the first half, because we cannot predict at this point of time about 2023 second half, because a lot of factors will come in. Slowly, gradually, if Russia and Ukraine war settles down or they come into some kind of negotiation and the war doesn't spread, then obviously there will be a chance that global inflation will also start settling down. I think Fed will hike the rate another 1 to 2% in a very quick manner, which will definitely will give a jittery to the all over the markets, in the global markets also. मेरे को लगता है कि 14,000 की लेवल हमने शायद टच ना कर पाए, लेकिन आसपास तो एक बार पहुंच जाएगा. 14,800, 14,600, 14,400 की लेवल आना चाहिए. But whatever I am telling you is not a sacrosanct. It may not happen. Only basis on some analysis we can tell that it may happen, it may not happen. To know more about this thing, you should consult a SEBI registered research analyst or investment advisor. So that is my request, that do not invest the money based on the YouTube video or a WhatsApp forward or an SMS. You should invest the money after consulting an investment advisor. Investment advisors know how to invest the money and what is the goal planning, how your financial planning is to be done and everything. See, ups and downs will be the part of the market. Since the market had started in India, probably we can say around 80s till 2022, where we are sitting today, we have seen lots of ups and downs. And market only works on ups and downs, because if there is no up, then people won't be able to book profit. If there is no down, then people won't be able to invest. They cannot invest only on the upside, and they cannot take out the money on that part. So it's not a horizontal or a 45-degree angle graph. It has to have an ups and downs. So downs, people use it, intelligent people will use it to invest the money, and when it is going up, people will use it to book their profits. So this thing will continue. I think in the nutshell, I must tell you that you should invest through SIP's way. When there is a market dip, you should consult your financial advisor and invest at that point of time. Try to invest into zero debt companies, so that the companies which have lower debt. If you do not have a time, mutual funds serve you the best, because they take care of all those things which are there in the market, and they know when to exit and when to enter into a fund, into a stock. So these things you can do it. If you are a mutual fund investor, I think SIPs are the best way to do it at this point of time. Thank you for watching it. If we have any more thing, we will come back. As well as if you have any questions, in last videos, a lot of people personally called me and asked me so many questions. If you have any questions, you may come back to me. We will try to answer those queries whenever we can. Thank you for watching.